All right, I've started recording. Okay, now when it comes to um MSNR, what is MSNR? MSNR is MSNR, sorry, means sorry. MSNR means Malaysian support and resistance. Okay, so it basically makes there are basically four, I think four, right? Types of MSNR. Okay. And I'm going to show you examples of these types of MSNR. MSNR is just the support and resistance. It's just the movement of price between two levels, between a support and a resistance. Okay. It's basically the movement of price from here to here. And from here to here, if it's for a reversal, or from here to another level above. But it's definitely from a support to a resistance, or from a resistance to a support. Okay, we have two basic traditional MSNR levels. Okay, two basic traditional MSNR levels. That is the support and the resistance. And under them, we have the types of MSNR. Okay, you guys are already aware of what MSNR is all about. I believe some of you have, a previous knowledge on what MSNR is all about. But the four types of, excuse me, the four types of MSNR includes one, the apex level. Apex level, otherwise called, excuse me, otherwise called A levels, right? Apex level, otherwise called A levels. And two is the valley, level, otherwise called V levels. Okay. So, and the next one is SBR. SBR, that is support become resistance. Okay. And the fourth one is RBS. That is resistance become support. Okay. And the fifth one, okay, I think they are more than four, actually. They are more than four. The fifth one is OCLs. That is open close levels. All right. And the sixth one is QML. QML quasi module, or you can call it left shoulder. Okay. So these are the basic levels of MSNR. Okay. These are the basic levels of MSNR. I drew this thing. I drew this, to depict the basic levels of MSNR, but at the end of, after drawing them, I saw no need for the drawings because in actuality, they are actually in the chart, right? They are in the chart, so there is no point drawing these things, right? Okay. So now when it comes to apex levels, and when it comes to these levels, they are basically, when it comes to apex levels, they are basically, okay, let me clear this. Let me just copy. Sorry, let me just copy. Oh. Man, whatever. Okay. So they've even made me forget what I was trying to say. Okay, now when it comes to these levels, SNR is basically about two candlesticks. The support and resistance that we trade is just two candlesticks. We do not trade, level or zones. We do not trade zones, right? When people come on their chart, mark zones like this and stuff. No, that's not the kind of support and resistance we trade. We trade basically just two candlesticks. Okay. This is a typical example of um, Malaysian support and resistance, or these are typical examples of Malaysian support and resistance. So when it comes to apex levels, okay, I don't see a need for this. Okay, when it comes to apex levels, all right, apex levels is basically it's basically a bullish candle followed by a bearish candle. Okay. Apex level is a bullish candle followed by a bearish candle. Okay. All right. It's a bullish candle followed by a bearish candle. And valley level, okay, let's just discuss apex level first. Now, this is a typical example of an apex level. Okay. This is a typical example of an apex level. This is a typical example of an apex level, and it is shown like this on your chart. This is an apex level. Now, if you are confused, well, I'm sorry. I don't know why it is called Malaysian MSNR, Malaysian Support and Resistance. I don't know. But I just know that that's just the name, honestly. I don't really care about why it's called that, but I don't know. Let's just focus on using it to better our lives. That's what matters. Okay. So this is what it looks like. We work mostly with line chart and candlestick chart. Now, when you get confused on your line chart, just switch to your candlestick chart. It will make sense. Now, let me remove this. When you go to your candlestick chart, do you see it? This is your line chart, and this is where you mark on your line chart, on your candlestick chart. Now, when you go to your line chart, this is it. This is what it looks like, right? This is what it looks like. Now, this is an A level. This is apex level of MSNR. This also is apex level of MSNR. This is apex level of MSNR. Okay? Like I told you, this, all these levels are apex level of MSNR. Why? Because it's basically a bullish candle followed by a bearish candle. Now let's mark those levels. Now look at this level. Okay. Excuse me. Doesn't have to be perfect. It's an example. So look at this. Look at this. Look at this. Now, when you go to your candlestick chart, you will see that all these levels marked, even this, even this, even this, are all a picture of a bullish candle followed by a bearish candle. Now look at it. See, a bullish candle followed by a bearish candle. A bullish candle followed by a bearish candle. A bullish candle followed by a bearish candle. Same thing here, same thing here, same thing here, right? Same thing here, right? And the same thing here, just it goes on and on. Okay, that's what makes an apex level. But just listen, we are treating the basics. It doesn't mean whenever you see every apex level, you just, yeah, this is an apex level. I'm going to take my entry from this apex level. No, please don't do that. Okay, I'm just showing you examples of an apex level. Okay, all right. Now, when it comes to a V level, where is our drawing? Okay. Okay. When it comes to a valley level or V levels are basically valley is basically a bearish candle followed by a bullish candle. That's valley or V level. Okay. Is a bearish candle. Please take note of this. A bearish candle followed by a bullish candle. And where do you find them? Okay. Valley basically looks like this. This is what valley looks like. This is what valley looks like. And this is the V level. Okay. This is the V level. Please, I don't want this to be complicated. That's why I'm taking my time to explain all of this. Okay. So this is the V level. Now, when you go on your chart, to look for V levels, okay, this is what V levels look like. Um, I just want to show you ones that are mitigated. This is a V level. 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 Hold on. Okay. This is a V level. Follow my cursor. This is a V level. Here, this is a V level. This is a V level. This is a V level. Now, see on your line chart, see how they look. Those levels I pointed, they are all V levels. Now we are treating this on 30-minute time frame for the ease of our drawings. Because when you go to higher time frame to draw, it starts spiking your drawings and stuff. It makes you look messy. Okay, so these are V levels. These are levels of consideration on your higher time frame. Okay. And in that table of content, I didn't really put it wasn't complete. I didn't really put the concept of storyline, and it should actually be okay, yeah. Introduction to Advanced MSNR covers the concept of storyline. Okay. So storyline will be treated after this. Okay, so this is what make up V levels when it comes to SNR. Let's not waste our time on it because time is of essence. Okay. So that's basically what V level is all about. And the next on our list is the SBR level. Hey, babe. I'm actually having a class with my students right now. I'll call you back as soon as I'm done. It's all right. Take care. All right, sorry about that. Okay, SBR, support become resistance. Okay, is basically an um SBR, support become resistance, is basically a V level that failed to hold price, and then price, a V level that price, breaks through, and then in return price goes back to reclaim it. All right, let me show you. SBR. Now this is a V level, right? This is a V level, and it failed to hold price. Price is supposed to come, tap into this V level, and then keep going up. But instead, price came, broke it, right? Now, this V level now becomes, previously, it is a support that is supposed to sponsor another buy. But instead, it didn't hold price. So instead, it is now sponsoring a new sale. Hope you guys are following. It is now sponsoring a new sale. Are you guys following?
Yes.
All right.
Yes.
It is now sponsoring a new sale. It is supposed to sponsor buys from here, right? Price is supposed to come into this level from here, tap into it and then continue buying. But it did not do that. Instead, it broke it. Now it is now sponsoring a sale. Okay. This is price reclaiming this level that was, actually violated. That is why most of the times you see people taking entries like this, you know, you see people taking entries like this. These entries, kind of entries, are coming from SBR levels, support become resistance levels. Okay, this is your entry, this is your inducement. Okay, that's why you see people taking entries like this. Okay, so that is what an SBR is all about. Okay, now when it comes to, okay, let's show you what an SBR is on the chart. Okay, this is I want an SBR that has been reclaimed. I want an SBR that has been reclaimed. Okay, this we do. This we do, but if we go on higher time frame, it will be easier to find. Okay. On higher time frame to be easier to find, but this is Bitcoin chart. Bitcoin chart is not always the best chart. Okay, now look at here. Now look at here. Now look at this. What do you see? This is a resistance, a support that is supposed to sponsor more buys, right? But then price came, this is a support, but then price came, with an impulsive move, broke it, completely without any consideration, right? And now this is price, retesting back to that level to reclaim it. Now we see price This is price reclaiming that level. And what did he do after he reclaimed it? He dumped into this level, right? He dumped into this level. Okay, I'm just like using this as an example. You don't expect it to go all the way down. It's just an illustration. Okay. So this is also, okay, this is an RBS, but this is what an SBR looks like. This is also another SBR. Yeah. This is another SBR. This is a support. I already told you if you are confused about your structure, go to your line chart. This is your support. And was this support broken or not? It was. It doesn't actually have to be a structure. The retest might actually happen almost immediately when it comes to support levels. The retest might actually happen almost immediately. Now, this is your support level getting broken. This support level has been violated. Now, the next candle that formed, see, retested that level immediately and then dumped. Are you with me? You retested that level immediately. So it doesn't necessarily have to be a structure coming back to that level. It can be the next candlestick. Okay. Okay. It can be the next candlestick, right? That will actually retest into that SBR level. Okay. So next on our list is where is our drawing? Okay. Sorry. Okay. So next on our list will be next on our list will be next on our list will be, we've already talked about SBR, support become resistance. The next on our list will be RBS. Okay. Now RBS is a resistance become a support. Okay. So it looks like this. This is a resistance. Now this resistance is supposed to sponsor another buy, right? It's supposed to sponsor another sell, sorry. Correct? Yeah. It's supposed to sponsor another, let me bring it down. This is supposed to sponsor sales. Okay. So, but then price came from here. Instead of sponsoring the sales from here to here, price just broke above it. Okay. Now, the next movement that comes, it turns into a support. A resistance broken becomes a support. Okay. It turns into a support sponsoring buys. Okay. Now it means the bias has changed here. You were previously bearish, hoping to sell from here, but then price comes, violated it, and now some people call this breaker block. Yeah, some people call it breaker block, breaker, whatever. But from the concept we are using, is just RBS, resistance becomes support. Okay, this is a resistance, gets broken, turns into a support for a buy. Okay, and this is what it looks like on your chart. It's very simple. It's very simple. Just your candlestick. Mm, It's be just your candlestick. I'm actually trying to look for one. Now, this is a candlestick, an example of a candlestick. Um, okay, this is an example. Ah, okay, where is it? Okay, it's right here. Okay, this is your resistance. Why am I on 1 30-minute time frame? We don't even trade 30-minute time frame. Why am I here? Hmm, why am I on 30 minutes time frame? What am I doing on 30 minutes time frame? Now this is on daily time frame. It's just for drawing purposes. That's why I'm on that 30 minutes time frame. Now this is on the daily, this is the daily time frame. Okay. Now this is your daily resistance, right? The next candle is supposed to come into this level. Okay. Now let's just start it like this. Now this is a typical support level. Okay. This is a typical support level. A support, this is a typical support level. Okay. That is a bearish candle followed by a bullish candle. But then the next candle that came broke it. Now it has become a support, gets broken, turns into a resistance. It has become a resistance. Okay. And since it has become this resistance, the next candle is supposed to come into this level and keep buying. And this is your resistance to apex level. This is your apex level. Don't forget it. Apex level, a bullish candle followed by a bearish candle. Okay. Now the next candle that came breaks it. Now I'm still going to use this same level to elucidate on what a QML is, or left shoulder. So this particular level actually depicted all of them. Now this is a support, gets broken, turns into a resistance. That resistance gets broken again. But on the other hand, let's not look at the SBR. Let's focus on the resistance only, which is this bearish candle, bullish candle followed by a bearish candle. Okay? Hope we are following. Hope I'm not confusing anybody. Hope I'm not confusing anybody. Okay? Your mic should be on. Except your background is noisy, your mic should be on. So I know you guys are following. Okay. So this level now becomes a resistance, gets broken, turns into a support to sponsor more buys. Okay. Now the next candle that came, see, tapped right into it. And what happened next? He bought. Right. That is what an RBS means. A resistance, a resistance, I'm sorry. Okay, a resistance A resistance that gets broken and then turns into a support. Okay, so and this is what it looks like in your chart. It's actually the wick that mitigated these two levels. So this is just for drawing purposes. You might just find the wick here. So it's actually the wick that mitigated that level. This is your resistance level, gets broken, and then turns into a support. They retest into that level, sponsoring a new buy. Okay. Okay. Looks like Valley. Exactly. Exactly. Okay. So now this is what SBR looks like on your chart. You can find it everywhere. This is an SBR. Okay. Let me see. Oh, sorry, let me draw. I'm gonna have to draw this here. Hmm, all right, I'm gonna have to drop that there. Okay. Now this is an SBR. Let me see. This is an SBR. This is a resistance, gets broken, turns into a support. Ultimately, this level held price. Yeah, it didn't come into this support level, V level. Okay. So this level actually held the price. So this is also another example. I don't know, but I believe those examples I've given, I believe they are enough, for HBR. It's not really, it's important, but it's not really that big a deal. So it's not a big deal. So those are things, it's very, very basic when it comes to SNR. Okay. So, and next on our list, find these things are hard, bro. So next on our list is, so next on our list is OCLs. Now, OCL is just basically two candlesticks of the same direction. Okay. OCL is two candlesticks of the same direction. Why these ones make up of different candlesticks? These RBS, SBR, they all make up of different candlesticks. OCLs is basically two candlesticks. Okay, so this is what OCL looks like. OCL means open close, the open close of two candlesticks. So I'm just going to show you an example of OCL. Now, this is an example of an OCL. Okay, this is OCL. This is OCL. This is OCL. This is OCL. Are you guys following? This is OCL. This is OCL. This is OCL. This is OCL open close. This is open close. This is open close. It's basically this little gap between candles of the same color. Bullish open close is the gap between two bullish candles. Bearish open close is the gap between two bearish candles. Now, this is an open close. You see how price tapped into it and then continued moving. Are we following, guys?
Yeah.
You see how price tapped into it and then continued going down? This is an open close. You see how price tapped into it and then it continued going up. That is what an open close looks like. Okay, bullish open close, bearish open close, bullish open close, bearish open close. This is it. Bearish open close, bearish open close, right? Bullish open close. It's very, very basic. It's very simple. Okay, so don't complicate it. These are like the basics of them all. The most basic of them all, sorry. These are like the most basic of them all. Okay, so that's basically what makes up an open close when it comes to this very concept. Okay, and then the next on our list is QML. QML, I had an example here. QML is just, or you can also call it left shoulder. Okay. QML, you can also call it left shoulder. It is a resistance that gets broken. Um, and then you have bullish and bearish QML. Let me just show you. Now, this is, can also call it left shoulder. Okay. This is a resistance that gets broken, turns into a support. Now, QML is a support, a left shoulder. What am I even saying? Is an RBS, is a support that gets broken. This is like a bullish QML. So bullish QML is an SBR that gets broken, turns into a resistance, and then that same resistance gets broken again. It now becomes a new support. Hear me out. A resistance, a support. This is a bullish QML. A support that gets broken, right? Turns into a resistance, and price is supposed to sell from here. But again, that same resistance gets broken again. It becomes a new support. This is the level we are talking about. So this makes for your bullish QML, bullish left shoulder. So price comes back. If price comes back, you just to tap into this level and then you buy. Now, if if you actually started Forex in early 20s or early 2021 or 2020, because I think I started 2020 myself. So 2020, they will tell you this is head and shoulder, right?
Yes.
Head and shoulder pattern. So when they see this, they say head and shoulder has formed, is bullish. They start buying. Okay. So now you can actually now like understand the basic explanation behind this right now. This is a support that gets broken, turns into an SBR, and the SBR gets broken again. It becomes a QML or a left shoulder. Okay. It's also very simple. You can, okay, this is it. Now, for bearish QML, is a resistance. Sorry, what am I even saying? A resistance. Okay, let me move this higher. It will not look like they are too close. Okay. A bearish QML is a resistance. Let me remove these things. Okay. Sorry. Okay. A bearish QML is a resistance that gets broken, turns into a support that gets broken. Now it becomes a support. Okay, sorry. Okay, yeah, turns into a support to sponsor more buys from here. Price, you expect price to come, tap into this level, and then keep buying. But then instead, price comes, breaks that RBS again, resistance becoming support, it breaks it again, and here becomes your new left shoulder. Okay. Here becomes your QML, your bearish QML. See, the resistance gets broken, turns into a support, turns into an SBR, turns into an RBS. The resistance gets broken, turns into an RBS. Oh, come on, man, I'm stuttering. A resistance that gets broken, turns into a support, and that is RBS. Now, QML is RBS, bearish QML is RBS that is broken again. Let me just make it that simple. QML is RBS that is broken again for bearish QML. Okay? Bearish QML is an RBS that is broken again. This is an RBS. This level is an RBS. But then it is broken again. So price comes into that level, retested it again, and then it's now sponsoring sales. Okay, this is what your bearish QML looks like. Okay, and I don't know if you want me to show you an example. Yes, I'm gonna show you. Let me see if I'll find one. Hmm, Let me see if I'll find one. Don't know. It will be hard on the daily time frame. You mostly find these things on lower time frames. You mostly find these things on lower time. Sorry. You mostly find these things on lower time frames. Okay. So, uh, yep. Find one here. Found one here. Okay. Is this it? Of course it is. This is This is a bullish QML. Okay, sorry. This level is our area of focus. This is the QML right here. This one is just RBS. This one is just RBS. This is your QML, a bullish QML. Okay, now we expect price. This is support, gets broken, turns into a resistance, which is an SBR. Now this SBR has been broken again to turn into QML, left shoulder. So now we expect price to come into this left shoulder for more buying opportunities. Okay. Now this is what it looks like on your chart. Okay. This is what it looks like on your chart. Right. You can see similar structures, slightly different, but it's mostly and always like this. If it's slightly different, just go to your chart. If it's not like this, it's not a QML. Okay. If it's not like this, it is not a QML. Right. So price just comes, taps into it. Do you see it? Price just taps into it and then continues moving all the way up. Okay. The target was actually met around here. This should be your target, the high of that structure. Okay, so that is what a bullish QML looks like. Now for a bearish QML, I don't know if I'll find one. This is also another QML right here. I don't know if it was, yeah, it was mitigated. This is another QML. This is it. Support, resistance, support gets broken, turns into an SBR. This SBR gets broken again, turns into a QML support. So, and then price comes into that level. Price didn't reach here. See, price didn't reach here. So this is where sponsored all these buys from here. Okay. So that is what an SBR, sorry, a QML looks like on, yeah, that's just basically it. Okay, these are bullish QMLs for buys. I've not actually seen a good bearish QML, for sales. This can serve as one. This can actually serve as one, but it's most likely not going to hold. Okay, it's most likely not going to hold price. But I'm just like showing you guys an example. Okay, it's most likely, but it is an example of a QML. Okay, it is a support that gets broken, sorry, a resistance that gets broken and then turns into a support, and that same support level, that is RBS, now gets broken again, you know, becomes a left shoulder, a QML. Left shoulder, left shoulder. Yeah. That is basically what this that's basically the 6 types of SNR. Okay. That's basically the 6 types of SNR. Whew. So I hope you guys are following. Hope I'm not just going on and on. Hope you guys do understand what I'm teaching.
Yes, sir.
Someone exactly. You can't see the weak taps with line chart. You can't. You can't see the weak chart. You can't see the weak tap with line chart. Okay, so yeah, that is just it for these 6 types of MSNR. Okay. Now, there are still other things we will have to look at, which is the concept of key levels. So we'll talk about key levels before we go into storyline. Okay. Key levels, what makes a valid key level on fresh and unfresh key levels. Okay. Those are things we'll actually be talking about. Um, I hope it's okay if I clear this chat. Does anyone have any question on these 6 types of MSNR? Anybody?
No, sir.
Okay. Okay. So it's pretty clear. All right, that's okay. Let's just go ahead to clear the chart and then look at the concept of key level. Now, key level is pretty simple. Key levels are basically those things I just showed you. Key levels, they are not distorted from the things I just showed you. Key levels are the basic four types of MSNR. That's what make up a key level. But then it is not every key level you have to use. Okay. It is not every key level. It is not every key level that you have to use. Okay. Key levels. Remember, when talking about key levels, please, this is very important. Or when trading SNR, when talking about the four types of SNR, please do not go lower than the daily time frame. Do not go lower. You can only use okay. You can actually use some of those levels, but when it comes to the concept of key levels forms the basis of your storyline. Key levels form the basis of your storyline. Please, this is very important. Key levels form the basis of your storyline. So, since they form the basis of your storyline, we do not have H4 storyline. We only use storyline from daily, weekly, and monthly. And you can use other higher time frames you want. But we don't go below daily when it comes to the concept of key levels. Okay. Now this is a key level. Let's go to the daily time frame. Let's go to the daily time frame. Now this is a key level. This is a key level. This is a key level. It's basically those SNR levels, those types of SNR, but on higher time frames. That's what make your key levels. But it is not all key levels you have to pay attention to. Okay. Now, for instance, this is a key level. Okay. Now, this key level has been consumed by this. It has been consumed by this candle. Okay. And then it has already given you its move all the way to this point. Okay. And on coming back, the first reaction you got is from here, and it sponsored some sales up to this point. Okay. It sponsored some buys, sorry. It sponsored some buys up to this point. And then price came, started reacting again from this key level. Are you seeing it? Now, do you think this level is going to hold? It's a key level, correct? Do you think this level is going to hold? That is where the concept of fresh and unfresh key levels come into question. Okay. Fresh key levels, most times, majority of the times, are what you are to pay your attention to. Okay. Fresh key levels are what you are to pay your most attention to. When it is on fresh, bear it in mind that price is likely going to violate that level. It has why do I say it's on fresh? This is also a key level. This is OCL key level. Okay, this is OCL key level. Let me show you. This is OCL key level. This one has already, this is an RBS key level. This is an RBS key level. See? Is that? Okay. This is an RBS key level. Okay. This is an RBS key level. This is an OCL key level. This is a V level key level. This is a valley key level. This is apex key level. This is inverse OCL key level. This is apex key level. This is bearish OCL key level. This is bullish OCL key level. Bearish OCL key level. Valley key level. Oh, sorry, apex key level. Another key level here. Another key level here. A key level here. See, all these levels, provided they are on higher time frames, will sponsor some reactions, some moves. Every reaction that is happening in the market is coming from somewhere and it is actually going somewhere. From the concept that I am actually using, I also consider fair value gaps as my key level. This will be when we enter into what is it called? CRT. I consider fair value gaps only on higher time frames. Only on higher time frames. That's only the time I consider fair value gaps as my key level. Now, okay. Now, when it comes to this, this is your CRT, CRT low, CRT high, key level, price came, tapped into it, reacted, and then ultimately this high was taken and price tapped into this daily fair value gap and dumped. See, this reaction came from here. This reaction came from here. This one, this is the only fresh level here, even though the wick went beyond where we wanted to reach or we wanted it to reach. Okay, this is the only fresh level here. And ultimately, this high was taken and price tapped into here before dumping. Okay, these are key levels, but how you integrate them is what matters. Okay, and now that brings us to the concept of storyline. You can't talk about key levels without talking about storyline. Okay, storyline, like I told you, happens only on daily, weekly, and monthly time frame. Storylines happen on daily, weekly, and monthly time frame. Okay, that's where storylines occur. We don't do storylines on H4, H1, 2 hours, 30 minutes. No, please. I don't even go down to 15 minutes when it comes to refining my chart. I don't go down to 15 minutes. Most of the time, I stop at 30 or even H1. Sometimes I just use H4 and do my thing and go. Okay. So now, what is storyline? What is storyline? Storyline is just very simple. It is price rejecting from a key level and then you drop to one time frame lower than the storyline time frame to confirm a breakout. Okay. Now let's look at this. Let's look at this. Let's look at this. This is just an example. Okay, now this is a key level, correct? or let's just use this level here. Now, this is a key level, correct? This is an RBS key level, right? Okay, so now the next candle came, rejected. Now, this is when you go down to one time frame lower, which is this is a daily storyline. We're looking at daily storyline. Daily reject daily. We go to H4 to look for H4 breakout. Where did that rejection happen? Where did it occur? Um, am I not real? Okay, this is it. The rejection happened here. I think we've lost the chart. Oh, come on, price. What did you just do? Okay, well, let's just use another level. I don't know, I just lost that chart I was using. Okay. So let's just use this level here. Okay. Now we are on the daily time frame, and this is your daily structure, your daily key level, your daily V level. I told you all those SNR levels make up our key levels. Okay. Now this is your daily key level, right? And here we have daily rejecting daily. Now you have to wait for candle closure, for that day's candle to close before you confirm rejection. And not when you're still in that trading day. Let's say this is Monday and this is price just tapped into here and we are still trading on Monday. You are saying, yeah, this is daily rejecting, this is daily reject daily. No, this is daily rejecting daily. This is not rejection. This is rejecting. Rejection is after this daily candle has closed. That's when you talk about rejection. This is daily rejecting daily time frame. And what do? You go to H4. Now, I told my people that we have two types of entries. Okay. You go to H4 and look for H4 breakout. Now, it will be very difficult to get a breakout in this type of scenario. Okay, which means you'll be losing most of the moves because this is where you'll be looking for breakout, correct? You'll be missing out on the move from here to this point. Okay, now this takes us to the second type of entry, second entry type. This is the second entry type. The first entry type is daily reject daily H4 breakout. Daily reject daily, H4 breakout. H4 is one time frame lower than the daily time frame. Okay, I don't want you guys to get lost. Please, if you feel confused at any point, ask me your question. I'll answer. Okay, daily reject daily, H4 breakout. That breakout is set to happen here, except price gives you something else around this region. But we are just going to use the second, a risky kind of entry type. This is entry type 2, which is a daily reject daily. You have this here. There is no breakout yet. This entry is in anticipation of the breakout. It is very risky. Okay. This is daily reject daily H4 support. Daily reject daily H4 support. This is for bullish storyline. Daily reject daily H4 support. There is no breakout yet. So you just place your entry here. Take your stop loss below this low. Okay. And then told you most of the time that it's risky. And then in anticipation of the shift of the breakout, you just take the entry like that. See, rise, tapped into it, and then it moves. Now, this now becomes your H4 breakout. This is H4 breakout. Let me take this out. This, you can call this your breakout. Okay? Is H4 structure on its own. This is it. Is H4 structure on its own. This is it. It's an RBS. The resistance becomes support. Okay? We already have first entry here. Now we have H4 breakout. What do you want to see? See your entry. Where is your target? Okay. Damn, man, we have a lot to talk about, which is a lot actually in that content. The concept of obstacle. Well, obstacle is very small, is is um is very, very small. It's not like a huge something. Okay, so we'll just like talk about it. We'll just talk about target, where you will be targeting. Although most of the time we use CRT for our target, which is actually what I trade. But in a daily time frame, the obstacle of the daily time frame is in a daily bullish storyline. The obstacle is daily resistance. You are buying from a daily support. The obstacle is um is daily sorry is daily resistance. Okay, you're buying from a daily support. The obstacle is daily resistance. Okay, but if a higher time frame structure is there before that resistance, please consider that higher time frame structure first before you start considering that of the daily. But the storyline usually ends with the time frame that it begins with. Okay, the storyline ends with the time frame it begins with. So this is it, and you can see the push all the way to that point. Okay, now where we will be looking to exit this trade, we entered here. So now we don't even have any fresh level around here. So we'll be looking to exit this trade here. This is the fresh level here, or this level, right? That is why when I bought from this level, I held it all the way to that level. You guys saw the trade. I bought from this level. I held all the way to this point. Okay. So that is actually how you treat it. That is actually how storyline works. Now, this is like the first entry. Okay. This is the first entry. You had your first entry here, your second entry here. Price did not give any other re-entry in this level. It just pumped all the way to this, H4 level. If you missed this one, this was the risky entry here. This was the risky entry from this point. This was the risky one. This is the breakout. It is the less risky one. This is a less risky one. Okay, so this is, if you miss this one, you could have actually, if you miss this one, you could have taken this one. All right. And even if you missed this one too, I believe you should have actually taken advantage of this one if you go down to lower time frame. Okay. This is not a storyline we are talking about. Mm, oh, well, the second entry would have come from here. Why am I saying that? Why am I saying that? This is H4OCL. Although it's not a key level, but this is where you should have actually gotten a re-entry, because the next candle that will open, you just have to refine this H4OCL. For the next candle that will open, we come into that H4OCL. Okay. This is the H4OCL here. Let's just mark it. And we go to either 2 hours. Okay. And this is 2 hours time frame. And this is 2 hours swept liquidity. I think I'm actually going deeper than I should in treating this storyline. This is 2 hours swept liquidity. This is your 2 hour structure. Okay. Do you see it? Guys, do you see it? Hello?
Yes, sir.
Good.
Perfect, perfect, sir.
This is how you follow this. This is how you follow it. Now, I'm not saying you should be out there chasing every trade you see. No. I don't want you to be on your chart chasing every setup. But I'm just, showing you how market presents re-entries. I'm just showing you how market present re-entries. Now you missed this one, or you took this one here. You took this one here. Another one presented itself here. This is the breakout, RBS. You took the second one here, and price closed above here. This is an OCL. You just have to go to higher and lower time frame, either 2 hours, 1 hour, refine this level. I think you can actually see it on H1. Yeah, you can. This is it. Even H1 is perfect. It is perfect on H1. It even has a liquidity. This is the liquidity right here. Why is it liquidity? We'll talk about it. This candle didn't tap into this level. Okay? So that is how you actually take all these entries. You miss the first one, miss the second one, market is still there for you. You get this one. Okay, so don't just go about, you see price has moved significantly, you start placing your entry here. Now we are bullish. Bro, don't do that. Stick to the plan. Your setup will always form. It just boils down to your ability of knowing when to start buying, when to stop buying, when to start selling, when to stop selling. Okay? All right. So that is just it. Now, in a daily bullish storyline is daily reject daily, H4 breakout, H4 breakout. Okay? You see how we started with a daily bullish storyline. Let me just go ahead and clear this. We started with a daily bullish storyline. Daily rejected daily from here. We use the first entry, the type 2 entry, which is the one that has not given you a breakout, but then that is H4 has not given you a breakout, but there is H4 support, fresh support. It has to be fresh. But there is H4 fresh support. Daily rejected daily here, H4 fresh support around here. You take your entry from that fresh support, although with a higher risk, and then you start, and then you start waiting for your breakout. That entry is in anticipation of the breakout. Okay, it is in anticipation of the breakout. And you have to be very sure that that key level you are taking advantage of is actually in the right direction, that you are trading in the right direction. Okay, that you're trading in the right direction. Why? You can actually see the price has already broken structure here on the daily. Daily has shifted here. This is daily shift. And the reaction is coming from a daily QML. The reaction is coming from a daily QML. Okay, now this is this QML getting tapped into, and after that, you can see here multiple dailies rejecting from this level. You can see it, and then this is where you even started looking for your entry. Another daily rejecting a daily level. So don't just go about chasing all kinds of entries, just stick to your plan and stick to your system. It will come. Okay? It will come. So this is it. A daily reject daily, H4 broker, H4. Okay, let's now look for the traditional breakout, the entry type 1. Okay, let's see if we will have it here. Let's see if we will have it here. All right, a daily reject daily. See, where is the daily time frame? Okay. Now, this is a daily rejecting daily. This is where the rejection happened. Okay. And now this is your H4 breakout. Okay. Now, since this is where the rejection happened, let's say around here. Let's say around here. Now you are in H4. You have your first entry. Okay. Now this is where you are looking for your shift, but you have your first entry already. Your entry type 2. Hello, you have your entry type 2. I don't think price got to that level. This is H4. You have your entry type 2. So you just place your entry around here. Some of the time, that's why I told you this is like mid-risk setup. Okay. You can decide to put your stop above this next key level here. Okay. That's like the most ideal thing to do. So you have your entry there. Now do you see? This is your first entry. This is your type 2 entry. Guys, are we following? This is your daily reject daily H4 resistance, sorry. H4 resistance. Okay, it's right there. H4 resistance, no support. And then you just place your entry here with your stop above this high or somewhere above the next POI, which is this. In anticipation of the breakout that is going to happen here. Where is your ultimate target? Here. This is where you are looking to target. Now you have your breakout. What do you want to do? This is an SBR. This SBR level. I'm just like showing you the basics. Daily reject daily, H4 breakout. You then look for entry. So now in looking for this entry, you've already missed the move that happened here. Am I making sense? You've already missed.
Yes.
Okay. You've already missed the move that happened from this level to this point, to the breakout point. That is why I said it is in anticipation of the breakout. Now, since you've missed the move, this is your next area of consideration. First of all, you go to the daily. Why is that your next area of consideration? Okay. This is daily SBR, support become resistance. Okay. You just mark that level. I feel like it has already been consumed, but this is actually before this target. This daily move happened before this target. So I'm just going to mark that level on the daily. Okay. No, that's not where we'll be looking at. We'll just focus on the H4. H4 breakout. Now you focus on this H4 SBR. You see what price does in the place in this SBR level. Now let's see. You see, price just use that SBR for the next dump. Now this is more like twice this dump. Okay, so even if you didn't take this, you could have also taken advantage of this very one here. Okay, let's see what 2 hours look like. Sketching. Oh, well. Okay, so that is just the basics of it. Daily reject daily, H4 breakout. You have your entry. That's what storyline is about. Weekly reject weekly, daily breakout. Let me remove this.
1 minute, sir.
All right.
Sir, if we are entering from the middle, so where we gonna put our SL?
Sorry, could you come again?
After the breakout, the second entry, where we are going to put our SL?
Your stop loss.
After the breakout. Yes.
Okay. Now on the second entry, what I personally do, right? In this very scenario, let's say I am going to take this entry, although I don't take this type of entries, but let's say I'm going to take this entry from here. This is my entry. This is the next key level. And in this candle, where is the high of this candle that made up of my entry or that makes my entry? Where is the high of this candle? Okay, let's say you are using on an SMC order block. Let's say you are using an SMC order block and you only use candle body as your order block. This is what I use personally. Okay, if I'm taking this entry from here, this shall be my stop loss. Okay. I don't know where you are targeting. I don't know how many RR you are targeting, but remember we are on, a higher time frame, right? But that will be my stop loss. This is your normal SMC order block, right?
Mm.
This is your normal SMC order block. If we're looking to buy, hold on. If you were looking to buy, let's remove this. Okay, if we're looking to buy, this is where you'll be buying from, right?
Yeah.
This is where you'll be buying from with your SL. Some of you place your SL around this level, but because I trade SNR, I know there is no other level. If price ends up taking this low, there is no other level lower. So my SL will just be a little below this low. That is how I frame my SL. Now, if price comes, takes me out, I'll know, yeah, price is coming to clear this low. There is nothing else here to hold price. Okay, this is my obstacle. This is my obstacle. So if this level fails, there is no other place that will hold price. And same goes for this sell scenario. Okay. Hope I'm making sense.
Okay, sir.
Hope you understand.
Yes, sir.
Now, because it is this candle formed the basis of this SBR. You are gonna have to put your entry slightly above the body of that very candle. This is just another example. We might see others in the event of backtesting sessions. Okay, but this is
Okay.
just what I usually do. I'll just place my SL, right? Just mark it as an order block, place your SL right above that level, and then wait for price. If price takes you out, it's not your fault. That's just market condition. Okay. So this is basically it. This is what the storyline is all about. If you are using weekly storyline, weekly storyline is just about weekly rejecting weekly. See, it ended up giving you, this is 7 hour, this is 7%. This is 7%. You're on H4 with a big SL. This is like 50 pips SL. This is 7%. Okay. So
Yes, sir.
if you're using weekly, rejecting weekly, your next line of action is to look for daily breakout. Okay, let's look for one here. This is weekly time frame, and this is weekly rejecting weekly. Hello, this is weekly rejecting weekly. This is daily breakout. This is where the weekly candle rejected from this weekly structure here. This is a new week candle, and this is where you had your breakout. Now it's usually very hard, to take, you wait a lot when it comes to weekly storyline. You wait a lot for price to come back all the way to this level and, blah, 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 and all of that. You will wait. Okay. So now, weekly reject weekly. This is like the most basic of them all. This is weekly reject weekly. This is weekly structure. This is weekly key level. And you have your daily breakout right here. This is your weekly key level. You have your daily breakout right here. Okay. Now you just have to wait for price to come back all the way from that level to that level before you start looking for another sales. But before then, you have to bear in mind to know if another storyline has started. You have to know before price comes back to that level, you have to know if another storyline has started. Now let's look at this level. This is also, these are weekly struck. Okay, hold on. Okay, actually there is nothing here. There is nothing here but this fair value gap. There is nothing there. Okay, now let's look at this daily retracement into that level. Now you have a weekly reject weekly, and here now we are having another daily reject daily. Inside this same weekly level, we are looking for our cells. Okay, we go to H4, and here we have H4 breakout. You have your type 2 entry. Although price didn't come to that level, but you have your type 2 entry. You just have to go down to lower time frames and look for your entry, but that's just how you frame your storyline. A higher time frame rejecting from its key level, you go to one time frame lower. If it's on the monthly, you go to weekly time frame for your breakout. If it's on the weekly, you go to daily time frame for your breakout. If it's on the daily, you go to H4 time frame for your breakout. We don't use H4 for storylines. Okay, some people do, but I personally, I don't use H4 time frames for storyline. So storyline is just basically higher time frame rejecting from higher time frame key levels and then lower time frame breakout. Or a breakout happening on one time frame lower. Okay. Breakout happening on one time frame lower. So that's just basically what storyline is about. And in framing your storyline, be sure to know if that level, do not attempt to take a type 2 entry from an unfresh level. Now, what do I mean? Okay. I don't know how I'm going to explain this, but let's use this chart. Let's use the chart here. Okay. Now we have this. This is no longer fresh, right? This is a fresh level. Now the next candle comes, consumes it. It is now no longer fresh. And now the next, and remember we're on a daily time frame, a higher time frame, and this is a higher time frame key level. And now the next higher time frame candle comes, and you want to use this very move here on a storyline on an unfresh level. And you want to use a type 2 entry coming from an unfresh level. Do not try it. You use only type 2 entry, which is where you have only the you don't have a breakout yet, but just the support level or resistance level. I'm just using bearish storyline as in bullish storyline as an example. Okay, and now you are looking to take advantage. Remember, this daily key level, fresh key level here has already been mitigated by this. Now, after this mitigation, it is no longer fresh. It is no longer fresh. Now, this candle coming back to this level, and you're looking to take another entry here. Now, if you wanted to take any entry on H4, this would have been your entry. You can decide to refine on 2 hours, on 1 hour, wherever. You can decide to refine to this level. Yeah. You can decide to refine and then exit at the nearest obstacle. Okay. But then trying to take another entry from here is going to be disastrous because this daily level here, this daily level here, because this daily level here has already been consumed. The only level you can see here is this one. Okay. It has been consumed. Now trying to take another entry from this on fresh level to be disastrous. So price will end up doing this. Guys, hope I'm making sense. Trying to do that too, you should also be on the lookout for levels, obstacles. This is an obstacle. This is an obstacle. This is an obstacle. Okay? This is an obstacle. And following how I trade, this is a candle range. This is a candle range low. It is that simple. Now, having seen this, you still want to start taking an entry from here to buy. Where do you want to buy to? This is exactly the same thing that happened on CAD JPY this morning, of which I sent a premium signal to my people. But then as soon as I saw this, I told them to remove their orders, that they should not consider it a signal, because I won't be taking the trade anymore. I just saw something. They should delete their orders. All right. So those are things. It boils down to how flexible you are. To how flexible you are when it comes to price action and the market. Okay. When it comes to price action and the market. Weekly reject weekly, daily breakout. Do we have a breakout? No. Just weekly reject weekly and daily doing its thing. See. Yeah. That's just it. So that's basically what storylines is all about, guys. I don't usually use weekly. When I see a weekly storyline, I don't wait for daily breakouts. Okay. I just, from that weekly perspective, I start checking if daily storyline has formed from that level. When you talk about weekly storylines, it means you are actually targeting a weekly obstacle. Okay. If you are selling from a weekly level, right, your target should be a weekly level. That's why I told you guys, support and resistance, MSNR is just about price moving from a support to a resistance level, or from a resistance level to a support level. Okay. Now, your weekly resistance, in your weekly bearish storyline, your obstacle is your weekly resistance level, or a daily breakout level. Your obstacle is your weekly resistance level. If you are buying from a weekly resistance, your support, if you're selling from a weekly resistance, you should be looking to pay yourself exit at a weekly support. And here you are good to go. Okay. Here you are good to go. And that's just it. That's basically what storyline is all about. And I will elucidate more on this in our subsequent sessions. Okay. I think I should just, do a recap of this very session, wait for you people to ask your questions, because we've actually spent a lot of time. This is 2 hours already. Okay. We've actually spent a lot of time. So let's just end it here. But this is basically how you frame your storyline. Your storyline comes from a higher time frame key level, a higher time frame rejecting from a higher time frame, or a higher time frame rejection from a higher time frame, not rejecting. Rejecting, I already explained to you guys what rejecting and rejection means. Rejection means a closure, candle closure, the daily candle closure or the weekly candle closure. Okay. While rejecting, you are still in the week. You are still in this week, and this week's candle is still trading. And this week's candle is still trading, is still ranging up and down, going up and going down, based on H4 lower time frame movement. And you are saying this is a rejection. Now you have to go and look for your daily breakout. Please don't do that. Wait for that weekly candle to close. Or wait for the daily candle to close before you call it a rejection. Because this how price will come, trade. Okay. Now let me show you a typical example. Let me show you a typical example. Okay. Now this is daily candle. Now you are here. This is daily candle. And we are replaying using 1 hour time frame. Okay. Now, this is how this 1 hour time frame is just, pushing this candle up and down, up and down, up and down. See? Well, I don't know, before the closure. Oh, this is already another day, sorry. But this is just what I'm talking about. You have to wait for that day to close before you start considering it as a rejection. Otherwise, if you are still in that same trading day, it is rejecting. It is not rejection. So please bear that in mind. You have to wait for that day to close before you call it a rejection. And then you go to your H4 to look for a breakout. Now on the H4, you have a breakout, right? Then you start looking for your entry. You start looking for your entry. Let's see. Yep. Your liquidity entry from here. And that's it. So guys, that is all about the concept of storyline. And
Yeah, I thought that looking at that is looking at that rejection, like it's going to use the QM method to continue downward.
why do you think it will use the QM method? I told you guys, is this not SBR, support become resistance? Where is your inducement? You should form your inducement, or it depends on the next pullback, but this is the next pullback. Okay. I don't know if this setup is going to hold because I'm seeing a breakout here, a further breakout here, and then this week here. Okay. But let's just see if that level is going to hold price. It did. It did for some time. Ultimately, it did. See, I told you guys I'll teach you people about the concept of inducement. Your inducement is a factor of your POI. Sorry, your POI is a factor of your inducement. your POY, your inducement determines where you will place your entry. Okay? Supposing price after this breakout, the inducement came here. Now this here would be your entry. Okay, but instead, price, your inducement was from here. So this becomes your POY. Did you guys get it? Your inducement is a factor, or your POY is a factor of your inducement. Where your inducement lies determines where your POI will be. It took a hell lot of ranging around there, but eventually it dropped. For those who, I think this actually ranged for days. Damn. Before it dropped. But when it dropped, it was massive. You pay yourself here. You pay yourself here. It's that simple. Pay yourself here. Leave the market. Whatever position, whatever addition the market gives itself is a plus. You've already gotten what belongs to you. You've already gotten what belongs to you. Okay. So that is it. I hope that answered your question. Was that son of man?
Yeah.
All right. Does anybody else have a question?
All clear.
Okay. But do you guys actually understand what I taught?
Yes, sir.
Okay. Now let's go back to a recap of what we taught. We talked about MSNR. We said MSNR is just the movement of price from a support to a resistance, or from a resistance to a support. Okay, we went ahead to talk about the various types of MSNR, the 4 types of, or 5, 6 types of MSNR. Now, please, when it comes to forming your storyline, all those types of MSNR should be considered. Okay, do not leave anyone wanting. OCL, RBS, SBR, Apex, V-level, they should all be considered. You should pay attention to them. They form storylines. Even on fresh levels form storylines. But I only told you, do not try to take the mid-risk entry, which is the type 2 entry, when selling or when buying or selling from an unfresh level, when forming a storyline from an unfresh level. Don't try to take the type 2 entry. Only use the type 2 entry from a fresh level. Okay? Good. So now we talked about the types of SNR. This is Apex, V-level, SBR, RBS. Yeah, we explained what they are, and those ones were pretty clear. And then we went ahead to talk about the concept of key levels. And I told you guys, key levels are just basically those SNR, traditional SNR, traditional SNR types are those types of SNR, which is open, close, apex, V-level, and the rest of them. Those are what we consider key levels. Now, the reaction of price from those levels determine our next action. Okay, let's say today's candle, or let's say today's scan. Okay, let's just use this. Let's just use this. Now, if you're taking entry from here, you can't just take and wait. You have other entries. You have other setups here. You took the first entry here. This is a direct entry. You took it here, although it is not risky because you have this inducement. You took this direct entry here. You have this entry here. You have this entry here. Let me show you. You have this. That's an entry. You have this. That's an entry. Sorry. Sorry. Okay. Yo, come on. You have this, that's an entry, and it even formed a CRT. Okay. This is the candle range here. Candle range, high, low. Took out the high of that candle before contacting the key level. We'll address it. You have that, that's an entry. You also have this from this OCL. It's an entry. Okay. And then price came with this candle range here too. Here, contacted this OCL because price didn't actually contact this OCL from here. Contacted this OCL, broke, even swept liquidity. The next candle that came, you can find an entry from here, even though it didn't tap into this level, but you can find an entry from there. So those are entry opportunities. Now, after all these setups price offered you here, now you see, this is now you start scampering for entry when it's not offering you any. See, fresh, 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 fresh. There is no entry here. This is now you start looking, you see price is dumping consistently, and you start scampering for entry. You had this, you had this, you had this, you had this, you even had this. You had this from here too. And yeah, those are how that is actually how you look at it. Okay, that is how you look at it. So these are OCL key levels. Please pardon me for using this H4, but I'm just like showing you how you use them on higher time frames, not on H4, please. This I'm talking about higher time frames. When I told you guys the concept of key levels, we only use it on higher time frames from daily up. Okay. We only use it from higher time frames up, from daily time frames up. Okay. So that is how. And then when we talked about storyline, we said it only comes from key levels. And we already explained to you what key levels are. What makes a valid key level? What makes a high probability key level? It must be fresh. It must be fresh for it to be highly probable. It must be fresh. If it is unfresh, you see, we had a daily key level here, which was already consumed, I think around here, and then price came here, contacted it, tried buying a little, but then we had a major storyline coming from here, a weekly storyline coming from here. Do not attempt to switch from, if a weekly storyline is in play and it has not yet met its target, and you are trying to frame a daily storyline from here, you should be very, very cautious of where to exit. We framed the daily storyline from here, we exited here. Why? Because we are coming from a weekly storyline, a higher time frame storyline. And higher time frames always win. Higher time frames always win. Please bear that in mind. Okay. So that is just it. So storyline is just, higher time frame, reject higher time frame, key level, one time frame lower, breakout, a breakout on one time frame lower. If it's on monthly, breakout on weekly. If it's on the weekly, breakout on the daily. This daily, if the storyline is from the daily, you look for H4 breakout and go in the same direction. So that is actually what a storyline is all about. And I also told you guys on the concept of obstacles. Obstacles are your probable exit point. Okay. If your storyline is on the daily, then your exit point, say you are buying from, okay, let's see. Let's see. Okay. Now this is your weekly storyline. Your exit, well, this place has no it has no weekly obstacle. So it was just the target that was met here, nothing. Okay, there's no weekly obstacle. Now, in this very case, this is a weekly reject weekly from here. So now, if you form a storyline from here and you are buying, this should be your obstacle. You should pay yourself here. Take some positions off from this as soon as you get to this level. Okay, let's mark it. As soon as you get to this level, pay yourself. As soon as you get to that level, pay yourself. Pay yourself as soon as you get to that level on the weekly. There was actually nothing there on the weekly time frame, but price tends to reject, or price tends to reverse when it gets to the time frame, the obstacle of the time frame you framed the storyline from. Okay, if you are buying from a weekly support, pay yourself at the nearest weekly resistance. If you are buying from a daily support, pay yourself at the nearest daily resistance. Resistances can be OCL, left shoulder, or apex level. Support level, if you are selling from a support level, obstacles can be from V level, OCL, inverse OCL, left shoulder, and the rest of them. Okay, so as we progress, you get to understand most of these things. Okay, now please, I don't want to talk again, I'm tired. Now I want you guys to ask your questions, and yeah, please, for your assignment, I want everyone to go to the chat. I want to see, like, now, I don't want you guys sending me pictures of P levels because that one is pretty simple. Just I need a detailed follow-up of the storyline I just taught. If you have a question, you can still ask, even in the DM or even in that general group. And I want that group to be active, guys. I want that group to be active. Okay, I promise I will reply everyone. So I want everyone to take out 4 pairs and go to daily time frame or weekly time frame and frame a storyline. Find me a storyline on those pairs. How, a weekly rejected from a weekly structure, you go down to one time frame lower, which is daily. This is where daily broke out, and you show me where you got your entry from. This is where I entered, although I've not taught you the concept of liquidity inducement, but I just want you to, give me something. Although you are doing this in hindsight, true, but just do it. Okay, just do it. So this is where weekly rejected from. This is what daily did. And this is what I saw that made me buy or sell from this level. Okay, it's pretty simple. Can you guys do that?
Yes, sir.
Somebody said no, sir. Okay, that was 1413. Okay, so please, you guys just do that. Submit it in my DM, or you can submit it in the group. Just submit it in the group. I'll attend to everyone there. Okay, just submit it in the group. I'll attend to everyone there. And I want that group to be as active as possible. Our next section will be, we've already treated 2 topics. Our next section should be, let's say if I have time on Wednesday, we'll have a session on Wednesday. But if I don't, it should be on Saturday. Okay. My classes have resumed, but I'm definitely going to be available for you guys. I'll have to trade too. I'm looking for money as well. So our next session should be either Wednesday or Saturday. So you guys should bear that in mind. And please submit these assignments before that next session. So if I see anything, I'll correct it during the session. Is that okay? All right. All right. Thank you very much, guys. I hope you people got something. I'm going to drop the recording in that group. And I think I'm going to clear the old recordings from the group. I'm going to drop the recording in that group. And I hope you guys revisit it. It might actually clear your doubts. All right. Thank you very much for watching or for staying through the record, through the session. I hope you got something, and I'm looking forward to hearing from you guys. All right, have a nice day. Or does anyone else have another question? Anybody know?
No,
All
no,
right,
thank you, sir.
all right. I'll see you guys in the next session. Have a good day. All right, that's okay.